Okay, what's up guys? Welcome to Butho Academy. So today guys, I decided to do our first video that will be posted on our Telegram channel. So yeah, without wasting more time, I think let's just get into it. So our video is basically analyzing the market. As you all see now, the time is 12:26. That means the market is closed. So we analyzing the market, targeting to take trades for tomorrow. So basically looking at what is going to happen in certain pairs on certain currencies and certain indices. As we all know that we trade indices and currencies. We don't do synthetics. So yeah, of course guys, if you haven't subscribed to our Telegram channel, please do so that you don't miss out this lesson. So let's just get into it. Okay. All right. Let's just get into it. So my initial target tomorrow is to trade Nasdaq. So as we all see that Nasdaq, I have opened the chart for Nasdaq, like I always say to you guys. Every time when I open my chart, I make it a point that it has to be clear. So I just erase whatever that is there. I made a point that I remove off. Everything has been removed. So I made a point that I refresh my chart just to be on a clean spot. So there is a new way that I actually now analyze the market with. So most of you know, some of you know that I've told you, some of you I haven't told you. So with this type of analysis that I use, it's basically me analyzing the market using a strategy. I haven't given the strategy a name, but you can always give it a name. But then they actually call it like the use of major swings. So the use of major swings, that is a major swing high and major swing low. So basically, the thing is like this. So this strategy works in this way. Let's say I want to trade a 5 minutes time frame, or let's just say I want to trade a 5 minutes time frame. I want to take my trades on 5 minutes time frame. So this is how the chart of 5 minutes time frame look like. So my analysis will start on 30 minutes time frame. I just jump the weekly time frame and go to 30 minutes time frame. So this is where my analysis will be, and then I scale down to 5 minutes and then take my trades on 5 minutes time frame. So this is how I do it, guys. This is how I do it. So this is how major swing lows and major swing highs work. So the first thing that I do, I reset my chart and make it a point that maybe I zoom out 3 to 4 times. 1, 2, 3. You can zoom out to 4 times if you want to make a point that my chart is aligned at the center. So now the first thing that I do, I identify the highest point where the market could go. Since you see that the market from this point has been going down, the market at this point has been going down. So what I do now, I just highlight the spot using a horizontal line. I highlight the spot. So you can see that from that part, the market has been going down, meaning to say we've been having a bearish market. So if we've been having a bearish market, now what I do, I identify my major swing low and my major swing high. So what I do now, remember we are on a downtrend. So this is how it works. This is how it works. So when I'm identifying my major swing high and my major swing lows, usually I use this line, the trend line. So now I identify the first point where the highest point where the market could go. From there, going to where it created our first lower low, which is this one. This is the part where it created our first lower low. So when it created that first lower low, and then I then put another trend line where it created our first lower low, I take it to the next point where it created our first higher low, which is this one. Our first higher low, our next higher low, it was that one before it went down. So now when I do this part automatically, we call it a major swing. Even why can't I write it? Okay, let me just do this. Sorry guys, my bad. This part when it's on, we call it a major swing high. So if it's a major swing high, and I would like to just highlight it like that so that you guys see. I will add a text there, put text there, put text there. Even, yeah, put text there, major swing high. Even, I said you should right there. MS high. That one becomes our major swing high. Like I said, as you can see, I have highlighted it as a major swing high. So this part, the lowest part of it becomes our major swing low. So the lowest part becomes our major swing low. So I have to put a text there. MSL becomes our major swing low. So if this part, it came from this high, it created this low. So it becomes our major swing low. So this one is our low, guys. So our low, I will try to put a different color so that you see that it's a low. Okay, those are our lows, guys. So this is basically, this is how it is. Which one? Basically, this is how it is. So now from there, what then do? I identify the next lowest part where the market could go. So major ones, like it says, major ones. So I'll go to this one. I would have gone to that one, but now I'm saying it like it's a bit small. So I'll go to this one. I'll go to this one. So the part where it breaks our previous major swing low, basically it approves that the next point where we're sitting on becomes our major swing, becomes our next major swing low. Remember now, this one is not a swing low before it gets broken, before the previous major swing low gets broken. So this one won't be the major swing high before this major swing low gets broken. So now, automatically, when it breaks this line, when it breaks this major swing low, it automatically approves this as a major, automatically approves this one as a major swing high. This one is a major swing high. So now we have our major swing high there now. Which color, by the way? This now, it is automatically approved as a major swing high. It is automatically approved as a major swing high, like you can see. So the simple explanation of this is that you identify the highest part where the market could go, and then highlight that highest part as a major swing high, and then identify the lowest part that it created after from that previous major swing high. That point becomes where it came in, it came down and then decided to go up a little bit, or a major, like a major upward movement. So that part automatically becomes a major swing low. So when the market now turns the direction towards your selling direction or towards the bearish direction, breaking the previous major swing low, it automatically approves the previous movement or the previous point as the major swing high. You understand? So this pathway it created right now, if we are to continue with identifying our major swing lows and our major swing highs, this is how it will be. This part from here, it comes here, they creating this one automatically becoming our major. This one becoming our major. It automatically becomes our major swing high. Our major swing high. Then now, when it breaks this part, we will have our major swing low. Now line, horizontal line. Let me just make this horizontal line be dotted. Right. Okay, and this one, these major swings, I just dot them so that it becomes nicer and easier to see. Now, we have this major swing high, major swing low, major swing high, major swing low created here, and then when it breaks this one, we'll have a major swing low. We'll have a major swing. This one is approving this one as a major swing low. So does it break that one? Yes, it does. Wait, let me highlight that. Let me push it down. It's breaking it, coming to this one. Right. Major swing high, major swing high, major swing low, major swing high, major swing low, major swing high again, major swing low. So you continue identifying them like that. Just a smaller minor one. I'll tell you why I'm highlighting this one. Because remember, I'm taking my trades on 5 minutes time frame. You see that on 5 minutes time frame, these candlesticks will be a bit more. Then from there, where does it take us to? It takes us to this major swing low. Again, yes, are we having our major swing high? What else are we having our major swing high? On that one, which one another one? On this one. From there, which one another one? With this one. From there, which one another one was created? From this one. Okay, just visually seeing the market going down there. So now, this is where the market is sitting. So we have this structure like this. So just to explain it in a simple way, without wasting time, in a clear picture. The structure is like this. We have 1, 2, 3, major swing high, major swing low. Right. So this is like this, guys. When we have a market breaking, this thing here, it is automatically approving this top part as a major swing high, right? Then when it comes back again, creating a major swing low here, again, when it comes here and sit and break this structure again here, we have another major swing low. So this is how it is, guys. Major swing high there, that is created, major swing low, major swing high there, that is created, major swing low, that is created here, major swing high, that is created here, major swing low, that is created here. Then we have a situation whereby then the market decides to turn a direction. Remember, we are on a bearish movement. So if the market turns direction, giving us now giving us a sign of of a bullish movement, the situation will be like this: the market failing to break this previous major swing low, right? It created that major swing high there, but comes back and failed to break this previous major swing low. So now, when we have a situation like that, when the market has failed to break this major swing low, it can happen that it comes here on our previous major swing high that we have. Ask this guy's language. These people that we live with always speak things that we don't understand and we feel like it's okay. Cool. Then when we have the market coming here to sit here, failing to break this structure, this previous major swing low, and then it can do this. Come here, sit again there, and come back, try again to break it and fail, and then eventually it decides to break that structure. So when we have a situation like this, where the market fails to break this structure, this previous major swing low, and then decides to consolidate, we call this consolidation. Sometimes it can eventually fail to break here and then come back and shoot. Okay. So now, when we have a situation like this, when the market fails to break this previous structure, which we call our previous lower low, when it breaks that previous high that we highlighted there, when it breaks that previous high, automatically it's approving that we are now on buys. We are now on buys. So what it will do, it will then come back again, sit on our major swing, come back and sit there, and then shoot up. So when it shoots up, breaking that previous major swing high, breaking that previous major swing high, automatically it's approving us, it's telling us that now we have created our major swing high, then it created a major swing low. When it created a major swing low, shooting up, breaking this one, again now it's pushing up. It's a sign that it has broke this, it's a sign that we're still going up. So this is how it works, guys. This is how this thing works. So now, on the situation that we are on to right now, let me just do this. On the situation that we are on to right now. So if I'm seeing this kind of movement that we are on to, where now I want to trade the current market price, where the market is sitting. Remember now, it came here. I'm now highlighting my previous major swing low that I'm working with. So horizontal line. This is actually my previous major swing low before it created that major swing high. So now, when the situation is like this, I now adjust to lower time frames. Remember, I said I'm trading 5 minutes, 5 minutes time frame. That is my analysis. It will be on 15 minutes time frame. So I go to 5 minutes time frame. Before I go to 5 minutes time frame, usually sometimes I start checking on 15 minutes time frame. What is happening on 15 minutes time frame? I go to 15 minutes time frame. Let me just go to 15 minutes time frame. Right. So when I'm on 15 minutes time frame now I can see. Now I can see what is happening. So before it created this one, I continue that we drew here. I now continue with my major swing lows on 15 minutes time frame. Major swing low that was created after creating major swing low that was created after this major swing low that we have there. Remember, now we have a major swing high there, which is you can just put it there because the market decided to consolidate here, trying to break and failing to break this structure. Tried to break here and failed to break there. So it consolidated there. So when it consolidated there, we have our major swing our major swing low being created here, here, because there's a low there. If you check properly, there's a low there. Though the major swing high, it was a bit small, it wasn't that major. So you created that low, major swing low there, and then after that one, it went up a little bit to where? To this candlestick. It's the one that I'm going to use, guys. There are minor ones in between though, so I'm not just highlighting the major ones. Then it went down, creating this major swing low there. Creating this major swing low there. So now, from here, what does it do? Consolidate, tries to break again this, and it fails. It tries again to break that and it fails. So what then do? I highlight that major swing high. I highlight the major swing high. And then the market from there, what did it do? From there, what did it do? You end up creating that major swing high. Then now it came back and sat down here. Okay, failing again to break this previous major swing low. So now I highlighted the major swing low, highlighting that major swing low. Highlighting that major swing low. So I have a structure like this now, guys. This is actually the structure that I'm trading now. So how then do I take my trades? That's the question. How then do I take my trades? Remember I said I'm taking my trades on 5 minutes time frame. So I'll adjust to 5 minutes time frame. This is how the structure looks like. So 5 minutes time. The time I'm going to chat I set it, zoom it 3 to 4 times. Okay, set, zoom out 3 to 4 times. And then make sure what you adjust so that I can see whatever that I want to trade. Remember, I'm seeing it that it is broke. Okay, now we're going back to our old truth. Our old truth says, guys, the market, if it's failing to break, is structureless. Every time when it breaks above, we have our buys every time when it breaks above line there. So this line, let me just make it be a straight line so that you guys see. Every time when it fails to break this line, we'll have our buys, right? It's been failing to break this line a couple of times. So whenever we have something like this, guys, this is a sign. 1, 2, the double top. We're expecting buys again. You understand? So that's why you see we had this one and this one, making it a double top. Then it actually on this situation is actually a double bottom because it's not on the top. So we have 1, 2 shooting up. Understand? So that's why we have a situation like this one now. Here we have 1 top, 2nd top. So what do you expect? We expect the market to shoot up. So before the market shoots up, guys, it does do this what it did here. As you can see, before it shoot up, we are expecting that after here, we're taking our buys every time. But remember, we have this liquidity here. So it would want to clear that liquidity before it goes up. You understand? It will want to clear that liquidity before it goes up. Liquidity meaning to say there were a lot of sellers coming in trying to force the market to go down. But then eventually AMA buyers, they became more now. So this type of situation where we have some liquidity, these type of situation, these candles are meant to clear this liquidity. They are meant to clear this liquidity. So we have our old school analysis that we have, guys. Remember, I always tell you guys, in your analysis, make sure you combine a lot of strategies. Now I'll make this look like clean like this. Understand? I'll make this look clean. So now, what do I do? In our strategies, like I'm saying to you guys, that work for me very well. So I go to 1 hour. I check on 1 hour what's happening, what I'm expecting on 1 hour. Like I said, I have this kind of structure that I drew. Remember, my highs and my lows and my major swing lows are still appearing here, right? We still have them here. So I go back to my old trend line trading strategy. I'm combining the two now. Trend line trading strategy comes like this. I'm identifying any low, but remember we're going on sales. So I'm identifying any low part, perfectly highlighting it, and perfectly drawing my trend line straight to my lower lows. I have this low part. I want it to look clean so that you guys can see. Delete that. Delete this one as well. Right, my first lower low, my second lower low. I want those lower low to look very clean. I want them to look very clean. So I have first lower low there. Let me highlight it. Oh, I have something that I use to highlight that is more clear. Wait, let's show this. Okay, second this one. First lower low. Where's my second one? My second one is this one. Guys, remember I always tell you, second one, and then where's my third one? Remember, on this one, on trend line trading strategy, you have to have first 2 points. And when you're drawing your first 2 points, you mustn't cut the wicks of your candlesticks. The wicks by wicks, I mean this. This bottom part of the candlestick. The one that is shaded is a body, and then this one, the small line, it's called a wick. So when you're drawing your trend line, on your first 2 points, you mustn't cut the wicks of the trend line. After identifying your first point, where you draw a line from your first point to the last point, you mustn't cut the wicks of your candlestick. I'll repeat that. Don't cut the wicks of your candlestick. So the third part doesn't matter because it's the one that shows you the direction. So the rule of the third part says when a candlestick breaks above the trend line. When they say breaks, they mean the body of it has to be above the trend line. So when it breaks above the trend line, it means you should expect buys. You should expect buys. But when it breaks below on this situation whereby we have a bearish market still going down. So meaning to say now, when it breaks below this trend line, when it breaks below this trend line, we now expect sales. So let me explain this like this, in this way. In a situation like this, guys, where I have my trend line sitting there, where I have my trend line sitting there. So this is actually like this, guys. I'm teaching you extra things here. Teaching you extra things. It's the trends. Where is the Chinese? Where is it? Yeah. This is actually explained like this, guys. Let me just do this. Try to drag it like this way so that you guys see. This is actually explained like this. We have situation whereby when they say it closes up, when they say it closes up, the candlestick has to be like this. Even guys, let me check. How do I draw this changes? Because he's been doing this to me like a couple of times. Fully highlight. Okay, sharp is fine. On a situation like this, okay, let me do this. Let me go to my whiteboard because here, you guys, I'm going to get this right. Share, share. You need to share whiteboard. Share whiteboard. Where is it? Uh, I'm bringing it, guys. Don't worry. Don't worry. There is the whiteboard. So we have a situation like this, guys. Uh, where we have our trend line there. So after having our trend line there, and then they say, now, when a candlestick closes above the line, let's say we were on sales, right? We have a candlestick coming down, coming down, candlestick coming down. Anamawics, remember, many anamawics, many they can just be potted. Then the candlestick that touches the line here, when it closes like this, guys, when they say above, like this, the body of it is above the line. The tail can be below. It's our third candlestick. We have something like this that has been happening. The market buying, selling, buying, selling. Understand? When it gets here, then the candlestick that closes finally becomes like this. Understand? Eventually, just know would say we now buying. We now buying. Remember, it's our third touch. We would have got something like the line coming all the way here. Where's our brush? We would have got something like the line coming like this, guys. Buy, first touch, buying, third touch, buying, then fourth touch. So when you see something like this happening, just know what now we still expect what buys, right? Cool. But in a situation where it's like this, now the candlestick closes below this line. Let's say it is a wick like this. The body of it is below the line. So just know we're no longer expecting buys. So what will happen? The market will maybe come back here against it or break a little bit, taking the liquidity or taking those with fewer cents out, or we call this a retracement, and then coming back to break this previous major low. That one becomes our major high, major swing high. This one becomes our major swing low. Down here comes back again, kancane, failing to break that previous one. Kwacha again, kancane, failing to break that previous one. Kwacha as it goes down, we still on sales. But here when it does this, breaking that previous one, we don't buy it. It will come back, sit here, again failing to break that previous one, come back, sit, maybe fail to reach that, break, again as it goes up. So this is how it is, guys. I didn't do art at school, so this is why you see my art like that. I would run away on art lessons, like run, because I didn't want to hear anything that has to do with art. So now, the deck. Okay, let me try to check out the screen. Now, show the one that I'm sharing is the one that we are on to. So this is what is happening now, guys. Remember, saying explaining about a what the fuck is going on? Okay. It's okay. It's okay. Don't worry. I will share my screen. I will still share my screen. Just a minute, guys. I don't know what happened. I touch a lot. Right. Share. Right. I'm sure the screen that I'm sharing is the right one now. Right, cool. So back to our chart, Nasdaq. So we have a situation like this. We have first low, second low, our third low there, breaking when? Our third low there. And then how did our third low break? Above. And then when I say it breaks above, what do we expect? We expect buys. We expected bullish market, we still expect buys. So from here, the market is going to shoot up. So it's either it can do this, guys. Either it can do this. Either it can do this. So now the market can do this, guys. Either it can do this. It can shoot up, come here, and sit here, right? Where is it sitting? On our previous major swing low, right? Major swing high effect. Come a little bit down, right now. How am I doing this? Come a little bit down, fail to come down to our trend line, and then breaks that previous high, continue to shoot up, right? So like this, guys. Can go like this, right? Breaking this previous high and shooting up. Or it can do this. It can't be bad and it can do this. Come here, and before it goes up that much, it comes back again, sit here, and then before it goes, it doesn't go down, then continue to swing high. Understand? Continue breaking that structure, swinging high. This is how the market can go, guys. This is how the market can go. And then on the other hand, remember here is now becoming our major swing low, and then whatever that is going to be created there will be our major swing high. So when it creates a major swing high there, we must also expect it to sell, maybe coming back again. Remember, it has created a major swing high. Okay, let me just quickly delete this one. No, let me just not delete it. Let me not delete it. Adjust to lower time frames. My time frame that I want to trade. So now I'm seeing, well, like the market is on buys. I'm seeing it is on buys. So this is what has been happening. I highlighted this spot like on our time frame. So where the market is sitting right now on our what do they call it? On our 5 minutes time frame. This is what is expected to happen. 1, 2, 3. Right. This is what is expected to happen. Let's draw this nicely. I said to you 3 touches of a trend line. But that rule applies, guys. Whatsoever said, keeping it basic and sticking with basic things helps. First is like this. We have our trend line drawn from that point. Making sure that I don't cut the wicks of my candlesticks. Right. Right. First touch, second touch, third touch. Understand? You can be this third touch, or you can go like this. You can say first touch, second touch, third touch. Or you can say first touch, second touch, third touch. Understand? So depending on which one you want to work with. So you can see now, first touch, second touch, third touch here. What happens? It breaks apart. What do? We expect buys. We're buying from where? To our previous. Remember, it's like this. It's just swing high. And then we just swing low. created where, created here. So this situation is like this, guys. I don't know if my lines are visible. I'm gonna try to change the size to just to make them more visible. This thing. So we are major swing high there, guys. Major swing low, major swing high, major swing low. So what then happens now? You highlight your major swing low. Let me take out this one. I'll take out this one so that you guys can see how simple I do this. Remember, I already highlighted because I said, like I said, guys, you must always highlight your major swing lows. I will use this one. I'll take this one. My previous major swing low is this one, guys. Where the line is now, it got broken here. You see this green candlestick? It broke above. The head of it is above the trend line. The head of the candlestick is above the trend line. The head of the candlestick is above the trend line. You need to say it broke above. So what they need to do, it will come back, retest the trend line, and then continue to shoot up. This is what is going to happen. It might come back, it might not come back. The market has opened. The market has opened. So let's see, Nakona, what is your mentor saying? So if you can do this, guys, now it can do this. Where is sitting right now? Remember, I said we are treating 5 minutes time frame, so it can do this. Like you can see, it went up, and then it will come back. Maybe what am I doing now? And this one confuses. Let me change these colors of this. Delete them. Now they will confuse me. But I know some of you. It will come back. Do like this. We can go up a little bit, come back down, retest this, and then go up. This is how this Shandisi can do. This is how this Shandisi can do. So on Nasdaq, I can confidently say we are on buys. You can confidently say, I know I can use the red one because the red one is the paper one. So now, when someone says to me, Butho, how then do I take my trades? Every time when I take my trade, the market takes me out. Yes, Lami takes me out. Lami does take me out. Right. So from where it is right now. So now what do you do then? You put a highlighting. You put a highlighting, just a rectangular triangle from your previous lower low, from your previous part where the market broke to your previous lower low, to your previous lower low. Highlight the spot, and when you highlight the spot, you divide it 50%. You divide it 50% of it. So 50% meaning to say divided the center of it. So now this then becomes your targeted spot. To say, let's just put a red line, right? So now the 50% of this, why am I doing this? Now the 50% of this previous lower low and this one becomes a spot whereby we are saying if the market is consolidating, when it gets inside this box, as long as it doesn't break below this line, that's when I can take my trades. But when it breaks below this line, I can't take my trades anymore. You understand? When it breaks this below this line, I can take my trades. Then now you can do this. Now you can do this. Then your stop loss has to be a little bit below this thing. Hey, risk yakho. Risk ratio 1 is to 16. 2 is to 5. Risk ratio has to be 2 is to 5, maybe, yeah. 2 is to 5 is fine. Because you mustn't go that far. Risk reward or risk somewhere there. Just a little bit below your previous low. So this is how you take your trades. This is how you take profit chart at this level. This is how you will take your trades, guys. This is how you clearly take your trades. How you clearly take your trades, guys. As simple as like that. So come sits here, and if it gets inside this line, if it gets inside this spot, you can always take your trades inside this spot. Understand? It will come back inside the spot, maybe. Or if it doesn't come back inside the spot, just sit there. So what I do now, maybe if I'm seeing it right there, seeing it failing, remember what would determine me taking how much is on inside here is the candlestick little trace line. If it retraces inside, comes inside the, if it retraces and touches the line and failing to break below this line, then it means to me I can get in from a buyer's one. But if it breaks below the line, it closes it below the line, I'll wait for a Manyama candlestick up until I see a bullish candlestick. So here I'll wait for a bullish candlestick. Up until I see a bullish candlestick. Bullish candlestick will be the sign of me taking my trades. As simple as that, guys. Any bullish candlestick that will appear here, it will be sign to say now buyers are coming in. So when buyers are coming in, I must do what? I must take my trades. So this is how it is, guys. With Nasdaq, this is what I expect. This is what I expect. This is what I expect. I guess everyone understood that. It was well explained. If you still have questions and if you still want to understand more, please don't hesitate to reach out to my inbox and find out on how you can do this thing, how you can analyze this thing. So most of my analysis, like I'll be trying to simplify it as time goes on, because I know it's still complicated at some point. Some of you hardly understand what I'll be explaining, but as time goes on, I'll be trying to make it a little bit simpler and simpler and simpler, with things that I'll also be finding out as I continue to work on my analysis. But the overall analysis for Nasdaq today, I took a lot of time analyzing the Nasdaq, trying to explain. But it gets to be easy when most of you have some ideas on how it's going on. So if you are new to the channel, please, you would have to you'd have to hit on my inbox so that I can share with you, or if I haven't told you before, hit on my inbox so that I can share with you the previous strategy that I've been using to analyze the market. Or if you are new, we don't have any idea with this thing, just reach out and I'll also show you how you can start it, how you can analyze the market, how you can get to spot things, how you can get to know what is the candlestick and so on. So, but basically, guys, you mustn't complicate this. This is the simplicity of it. If you can map this, like I'm telling you, no one will segregate you from the market. No one will segregate you. Will always find yourself maybe the right directions of the market. But sometimes, the market gets to be manipulative and you lose. So, guys, let's also remember to trade with the best RSG markets, the one and only broker that I trust. Like I always say, guys, I trust RSG markets a lot. And remember to subscribe to my Instagram channel. As you can see, guys, we still trying to grow the channel. To my Instagram account, subscribe to my to my Telegram account. as well. Follow me on TikTok as Butho Traders underscore. And then yeah, this is me guys. Yeah. So I'll be sharing more content with you as time goes on. Thank you so much for your time. Be blessed. Danke. Mhm. Mhm.